Today, I'm going to be giving you the single best strategy which made me a profitable ICT concepts trader. 5 whole years of ICT knowledge has been compiled into making this one video, in the hopes that the same thing that made me profitable also makes you profitable. Now let's not waste no time, as I'm sure you're already so tired of wasting time with stupid videos that don't get straight to the point, and with things that actually work. So the single most important thing with ICT concepts that you need to understand is that every single candle has an open, every single candle has a low, every single candle has a high, and every single candle has a close. This is a bullish depiction you see here. Now, every single candle does this, and they do it reversed as well. So this would be an open if we're reversing it. This would be a low, and this would be a close. Open, high, low, close, and then open, low, high, close. Okay, every single candle does this. Every single good trading day also does this. Okay, understand what I just said. Every single good high probability trading day does this and performs this function. So what do I mean? Let's dive into some examples straight away of exactly what I mean. You can see we're on the Nasdaq daily chart here. I want to focus on the daily. Now this idea of open, high, low, close and reversed happens on every time frame, but I want to focus on the daily as this time frame provides the most clarity when using it, and we can drop down to benefit from this concept. So let's dive into it. What do I mean? Well, let's take a look at price action here. You can see we've been trading upwards. It is quite clear if we zoom out to see that NQ has been trading upwards. We come into this area here. We deliver sell side and take out early sellers, and then we drive higher, and this candle closes above the 2 last up close candles, okay? This becomes our breaker because we swept a low and then swept a high, came back to reoffer fair value inside of a breaker. We're also inside of this fair value gap here, okay? Focus on this candle here. Look at this candle. What do? Open, low, high, close. It's a bit of a choppy one, but this candle does reject the fair value gap. We've created this 3 candle pattern you all are familiar with by now. This candle rejects it. Look what happens in the next few days. Open, low, high, close. Open, low, high, close. Open, low, high, close. That's 3 days in a row after we offered fair value that we performed this function. So what are we looking for? 1, fair value to be offered. And then 2, we're looking for open, low, high, close in bullish scenarios. You can see there are 3 opportunities here, and that's disregarding all of these. Let's dive into this bit of price action if we separate the days here and see how we can utilize it on a lower time frame. So if we take New York midnight of these days, because that is the time the algorithm refers to as the new day. If we take New York midnight on all 3 of these days after trading away from this daily fair value gap, let's label this our daily fair value gap, just so we don't forget. This is where fair value was offered, okay? Look what these days do. New York midnight. Draw that opening price right there on that candle out in time. I'll make it a different color so it stands out. And let's do it with every single candle here. So the orange candles on your screen is the price at New York midnight open. The daily fair value gap, which offered fair value, is marked here. You can see on the first day that we're anticipating an open, low, high, close. Look what happens. London session, 2 a.m. to 5 a.m. This creates the low of the day. We dive below New York midnight, giving us an oversold condition. We rally up, come back into the down close candles and rally up. Okay, this offered fair value below New York midnight opening price, and then we continue higher and reach into the close. Look what this day does. No volume in it here. Then we drop down below New York midnight. This time, New York creates the low of the day. It can either be London or New York. Okay, then look, get strong displacement up. Price returns to fair value of this range, 50%. then we move higher and expand into the close. Okay, that's 2 days in a row where we dip below New York Midnight Open, rally up, give an entry, and then move higher. Look exactly what happens again. Dip below, this is our Judah swing. We induce sellers as we're bullish straight away. Price moves higher, breaks a key high, and then trades back into an inverse fair value gap and delivers buy side really nicely and efficiently. Now, that right there is the power of open, low, high, close. Open, high, low, close now is exactly what I want to show you, okay? Look here on this chart here. You can see we have a rejection block on the daily time frame, okay? If we dive into a 4-hour time frame and take this range here, you can see once we hit this level on a lower time frame, this is an order block, okay? We take our high to the low, that's our range. You can see we're in a premium, okay? There is a premium fair value gap and a set of up close candles which took out buy side liquidity above these highs. Once we break lower, take out sell side liquidity below these lows with this, start to rally up, we now have a dealing range. Once we rally into the up close candles with the fair value gap in a premium market, we can expect a sell-off, okay? Now, remember on the daily time frame, we could anticipate an open high, low close here, but it is much harder to see on the daily. You can see we haven't had much expansion up into this premium area yet. So you could wait for this day to pass and now trade the following days into these lows. What I would like to do is drop onto the 4-hour time frame, because this piece of information is fractal. You can use this on a 4-hour time frame. You can use this on a 1-hour time frame. And if you use it on intraday time frames like the 1 and the 4-hour, you are positioning yourself in the wicks of these larger time frame candles, okay? So look at what we've got here. We wick into this premium level at what time? At a very key time for indices, the 10 a.m. 4 o'clock candle, okay? This is a fractal market maker sell model, because we've come into a premium level, a really key premium level, and we wick into it and create an open, high, low, close. What does the next candle do? In PM session, open, high, low, close, okay? It's the same thing on this time frame. And if you drop into a smaller entry time frame, let's say the 2 or the 3 minute, let's go on the 3 minute, okay? You can see once we hit this premium level, we start building structure lower. We fill an imbalance and create an up close candle here, which gets traded into and respected. We trade away from it, okay? We then have what is referred to as a redelivered, rebalanced price range inside here, which you can see price moves into, trades away from. We then break below some down close candles on the buy side of the curve. Remember, before taking out this bit of sell side liquidity, and we have lots of sell side liquidity resting back here, okay? So let me make this blue so this stands out as our target. You can see, where do we reaccumulate orders? You can see that these two down close candles here act as resistance on the other side once they're traded and closed below. We've traded from an order block, that's your first sell, we break lower, redelivered rebalanced price range. Second sell, we break lower past the down close candles which were supporting price to go higher, break below them, and now look where price stops. The body's closed below it, wick into it, body closes below it, wick, miss it, and look where the bodies are closing, all below this set of down close candles. That's your third sell. Then we trade below the original consolidation and sell side liquidity below here, all through the power of open, high, low, close on any time frame. Okay, understand that. Look at the 1 hour. If you don't believe me, go into this and check this. Find a bias, look at the different candles, and if they print open, high, low, close, or open, low, high, close if bullish. Okay, it does this on every single time frame. Open, high, low, close, open, small, high, low, close, open, high, low, close. This little fractal is a sell model, okay? And look, we keep doing it. There's an up close candle, skip it. Open, high, low, close, open, high, low, close, right into the close, into a premium of this dealing range, okay? From here to here. Look how easy that is to frame a trade. Do you understand now? And if you don't believe me, like I said, this is a 1 hour time frame. This happens on every single time frame. 15-minute, open, high, low, close, open, high, low, close. Again and again and again and again until we reach a further objective. So once you have a drawn liquidity or an objective you're aiming for, use this metric of the open, high, low, close and open, low, high, close to your advantage, and you will become a better trader. In 5 years of learning ICT, this is what I came out with. This is the one thing that actually made me money and actually works, okay? So with that being said, if you did enjoy the video, please drop a like and leave a comment. Subscribe if you're new. Check the socials in my description, and I appreciate you all tuning in. I hope you learned something, and I hope my 5 years of knowledge compiled into this one video, the most important thing I've learned, I hope it helps you out. So with that being said, thank you as always for watching, and I'll catch you in the next one.